Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, tech earnings were a hot topic on Wall Street this week, with those magnificent seven companies like Apple, Tesla, Meta, and Microsoft reporting these past few days. The action doesn't stop there, as Alphabet and Amazon are on deck with their results next week. Joining me now with more is Angelo Zino. He's VP and Senior Equity Analyst at CFRA Research. Angelo, it's great to see you. And let's start with Apple, because that company reporting after the close yesterday, better than expected results. What were the takeaways?
Yeah, so thanks for having me, Kristen. I think overall, when you kind of think about Apple, better than expected in terms of the top and bottom line. The guidance was actually surprisingly good. And the reason I say surprisingly good is this is a company that typically is very conservative on the guidance side of things. And instead, they essentially kind of guided where we were already kind of looking for them to guide. And really, it's the fact that they're executing extremely well on the services side of things. Services grew about 14% in the December quarter. Street was looking at 12%. That's helping to support a higher than expected margin profile, and of course, free cash flow. And that's kind of the name of the game when it comes to Apple. So as long as they can kind of execute on that side of things, we think the Apple story continues to work. The fear going into the numbers was, of course, China. China was abysmal. It declined 11%. It caused iPhone sales to actually decline when the street was looking for slight growth here in the quarter. That was kind of the one kind of gray area for the company. But again, as far as the guidance is concerned, it looks like China declines probably start to maybe aren't as bad as what we saw in the December quarter due to a subsidy program that was implemented in China. And the fact that kind of Apple Intelligence looks like it's doing well in the markets it has launched already is definitely a good sign out there, I think, for investors.
Certainly, we see Apple shares up 4% in the pre-market action. Angelo, we're just about 15 minutes away from that market open. I'm glad that you mentioned China, because that had been a focal point that we had learned about heading into this particular report. China also in focus specifically on the artificial intelligence angle that we saw at the start of the week. How should a tech company like Apple navigate that?
Well, it's interesting because Apple specifically, we think, is a net beneficiary of kind of some of the DeepSeek news that we've seen out there. You kind of look at, and really kind of DeepSeek does open up a whole can of worms out there and implications. But really kind of maybe the main takeaway is the fact that, hey, listen, there's going to be a lot more large language models that kind of enter the market here over the next couple of months, a lot coming from China. We just saw kind of Alibaba also launch their own kind of large language model as well. You're going to see more and more of these, and what that will hopefully do is help kind of commoditize the large language model market. I think the bulls out there will kind of hang their hat on saying, all right, well, we've got kind of lower options in terms of AI, make AI cheaper, and that kind of will help adoption and spur more demand on the enterprise side of things and what have you. For Apple specifically, they've kind of shied away from spending tens of billions of dollars in kind of developing their own models, unlike some of those other cloud players out there. And as a result, they should be a net beneficiary, because as those costs come down, they're going to be able to hopefully kind of find ways to monetize AI, whether it be through higher hardware pricing or new services out there. And it's going to be leveraged on kind of a lower cost profile on the kind of large language model side of things.
Angelo, I want to stick with the good news here, because Meta is probably the biggest blockbuster that we see from this week. That stock up almost 1% pre-market, touched a new all-time intraday high yesterday on the back of its results. Is Meta the bellwether now when it comes to this magnificent seven space?
You know what? That's a great question. And when I look at Meta, I've personally underestimated the story. We've had a buy recommendation on this stock for the last couple of years, but to be honest with you, we kind of viewed it as almost kind of this one-trick pony out there, and the fact that they've been largely leveraged to the digital ad space. But when you kind of look at what they've got in the pipeline here, you've got to be extremely positive about this company, and not necessarily just in 2025, but going into 2026 and 2027. on the AI front of things. I mean, clearly AI is helping them in terms of creating better kind of rankings, recommendations, content out there. But when you kind of think about Llama out there, you actually look at the DeepSeek news this week. The open source model approach is, we think, the right approach in kind of an AI-driven world. And Meta was the only one of the Mag 7 that actually took that approach. You kind of also look at what they've done in terms of some of the tools they've provided out there with advertisers in terms of Ad Advantage Plus. That's now at a north of a $20 billion run rate. Even some non-AI offerings out there, whether you kind of look at something like Threads, which is now testing ads, potential monetization into 2026 and beyond. Who knows what happens with TikTok here, but right now, with TikTok in limbo to an extent, Meta is a beneficiary. And then maybe the last comment I'll throw out there, Meta AI is turning into a beast right now, north of 700 million users. And we think there is a lot of monetization potential attached to that as well going into the next couple of years.
So, Angelo, we have probably about a minute or so left. And what I want to ask is about Microsoft as well, and what we can glean from the Mag 7 results this week, Microsoft and Meta in particular, in terms of what it means for NVIDIA as this AI arms race heats up.
Yeah, I mean, listen, I think as far as kind of, well, on Microsoft's side of things, cloud spend continues to remain very healthy. Microsoft was hit a bit because it remains somewhat capacity constrained on their end of things. That is expected to be more normalized as we kind of hit the middle of this year. But as far as kind of maybe tying the NVIDIA story here with Microsoft, Meta, as well as the other hyperscalers out there, these companies will continue to aggressively invest in our view. But that said, we do expect spending to start to moderate. And that could potentially be a thorn for NVIDIA, but not necessarily, because where we think some of that spending starts to ease is more on kind of the infrastructure build for data centers. We think the compute side of things will continue to see strong spending, and that should continue to benefit NVIDIA, albeit at slower growth rates out there. But overall, the broader kind of landscape out there for tech, we think looks very positive, and that kind of longer theme for AI as well.
We've heard those echoes elsewhere on the show, too. Angelo, Zino, so great to have you today. Thank you for joining. Angelo's VP and Senior Equity Analyst at CFRA Research.